Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it's August 8th. So we got, again, this week's pretty light, so we'll just jump right into it. We just got two items here for economic news releases. We start off with the productivity for Q2. We had a negative for the first quarter, 0.5%, and we figured it would jump up to about 1.3, and it jumped up to 1.6%. So we had a lot, second quarter had more productivity in there. The other item is unit labor cost for second quarter. We had a 5%, 6%, 5.6%, so a little bit higher cost for unit labor costs previously. And we figured it would come down a little bit in the second quarter, down to about 0.7%. And it did come down, so but not quite to what the forecast, 1.77%. Not huge impact on the markets or anything, but just something we can bring up there. Productivity, they'll kind of look at a little bit more than unit labor costs at this point. So as for headline news, basically stock market's up. Basically investors are just kind of looking at right now the earnings reports and some of the companies are out there, what's going on, and they're kind of looking at seeing that economy is probably not as bad as they think it is, but now they're questioning, okay, how good is it type of thing. So they're kind of in between. They see that maybe we're not as bad as off as where they thought we were, and you might see some improvement in the equity markets, and then, but the question is again, how good are we then? Where are we at? So, and then also there's talk, some tough talk out of Europe. A few people talking tough, but a lot of people are just the investors kind of shrugging it off because a lot of like Draghi and people like that have been talking tough, but there's no actions been backed up by it. So they're kind of shrugging them off their comments as of right now. So let's go ahead and take a look at the bond market and see where interest rates are at. We did dip down a bit yesterday. As you can see, the red candlestick went down lower, and we even touched the floor and pulled back. Today we basically start off where we started yesterday, and then we're working our way up and touching the top of the ceiling and kind of pulled back a little bit. So interest rates are a little bit better. I do anticipate us closing this. It might be kind of a steady work our way up as we kind of close the two gaps that we had over the last couple of days. As you see here, we had an opening gap here, pretty big one, and we also had an opening gap here. So here we started closing it, but we haven't fully closed it yet. So I do anticipate us get back up to this level at some point. It may take a week or two, maybe kind of like a steady stream, as we don't have really a lot of economic news releases scheduled for this week. Tomorrow we'll probably have some more news with the weekly jobs numbers that could make a little bit of an impact here this week. See where that comes in. But overall, interest rates are just slightly better yesterday, even though we had a worse thing with the opening gap to the worst yesterday. But if you compare us to yesterday, it's slightly better. But if you compare us earlier in the week, not as good. So, all right, folks, thanks for stopping by. Thanks for watching, and I will see you guys tomorrow. And again, if you guys if you like these reports, stop by Mike. I'd suggest maybe stopping by Mike's Daily Market Report. You can subscribe and have these reports sent to you. You do not go on any other reports. There's no spam or anything else that comes from me. It's just a feed burner. You subscribe, and whenever I post them, they come right directly to you. You guys have a wonderful day, and again, see you tomorrow.